Hello, I'm Mike Graham, CEO and co-founder of Midwestern Securities and the host of the Banking on Growth podcast. With us today is our friend Kim Snyder from KlariVis. Welcome, Kim.
Mike, thank you so much for having me.
Yeah, I'm really looking forward to this discussion. I've demoed some of your products and services. I think they're powerful. You and I have just had an opportunity to talk a little bit, and we have some things in common. So I think this is going to be a great, fun discussion. Will you start off for our listeners sharing a little bit about yourself and your company?
Yeah, absolutely, Mike. So I started my career actually as a CPA with KPMG and I landed in community banking, I don't know, 15-ish, 20 years into my career. I started with a local community bank in Roanoke, Virginia, which is where our company today is headquartered. As their chief financial officer, we were publicly traded. It was back during the Sarbanes-Oxley, time period that if you were a CPA, you don't remember that time period very fondly. But anyway, so I joined the bank there and I was their CFO for 10 years. Fell in love with community banking. We were a commercial oriented bank and we really worked hand in hand with our small businesses in our community and just were very integrated into the community. And unfortunately for me, not for our shareholders, but we ended up selling the bank back in 2015, and I had the opportunity to figure out what my next chapter was going to be when that transaction occurred. And I took some time off and decided I wanted to kind of step my toe into consulting because we did a lot of things really well at our bank. We were very top performing organization. Um, and we ran lean. And so I always felt as a banker, gosh, it would be great to have a group of bankers who understood systems, who understood the nomenclature, all the acronyms, all the stuff that if I wanted to move a project forward, I could just pick up a couple of people and say, "Hey, can you come in and help me get this project done?" Because we ran very lean, and so we always had more projects than we had capacity. And so that's what I tried to create with my consulting business. And I was very blessed that a lot of the relationships that I built while I was a CFO ended up translating into attorneys sending me clients and CPA firms sending me clients and other bankers sending me clients. And so that business took off really quickly for me and afforded me the capability to start hiring back some of the bankers who had worked with me at my previous bank. And so we ended up doing that for about 4.5 years. And we had a team of about 10 of us that had all worked together at our prior bank. And we did projects from strategic planning to finance and accounting to reporting. We did a lot of reporting. We were part of 13 different M&A transactions during the course of our company. So we stood up a practice to help banks actually do the heavy lifting on the merger after the deal was like after the investment bankers and the attorneys signed the documents, right? That's where the real work becomes prominent. And so we did that as well. And the thing that we learned through all of that work is that every bank was struggling with data. And we truly thought it was a small community bank. We were about 1 billion in assets when we sold our bank. So we were a true small community bank, but we were working with banks in the 10 to $20 billion asset range. And when we realized that they were managing data the same way we did, we realized that this is a real problem. And so that's kind of what set the stage for us to try to solve it. And we were very blessed in that we had this group of consulting clients that we were able to get feedback from while we were trying to build this thing inside of our consulting practice. And so over the course of really 2018, we built a proof of concept, if you will, and took it back to our clients and got some feedback and their suggestions on what they like, what they didn't like. So think about it as a focus group that we just kind of had in our back pocket, which was fantastic. And in 2019, I founded the company in February. We went ahead and decided to spin the company off, and we had 6 of those consulting clients actually give us their data to go build it. So we had this great working prototype, but we really needed the data to go kind of build out all the ingestion processes. And so we went and we did that in 2019, and we launched our product in the first quarter of 2020. So not the ideal time to launch a new product in the financial services space. But for us, it actually turned out to be perfect timing because in January, February, and March, we attended a bunch of national trade shows. We met with a lot of bankers, and on March 11th, when we were flying home from ICBA Live, we had 182 I had 182 business cards from this national launch of banks who were excited and interested and wanted us to call them back. Now, obviously, the world changed on March the 12th. That's when everybody started shutting things down, and we had a real, decision to make as COVID kind of prolonged, right? Because at that time, my husband and I were funding the company ourselves, and so, had we not had that launch, had we not that timing, I don't know that I would have had the fortitude to keep going, I'll be honest with you, right, once COVID happened, but because we had so much excitement around the product and what we were building, it gave David and I the opportunity and the confidence to go raise capital, and put our heads down and figure out how to build this company and get it where we want it to be. So, that's kind of a Reader's Digest version of kind of how we started and some of the things that we ran into along the way.
The bank you were the CFO of was publicly traded,
Mhm,
was very pretty small, a billion in assets.
mhm,
Pretty small for being publicly traded
mhm.
anyway. Then when you went out and you started the consulting business, you had a lot of referrals coming your way. Is it fair to summarize would you call it data analytics?
Mm-mm,
What
no,
would you
no, we
call
really
it?
we did a variety. When you start your own business, if somebody calls you and says, "Hey, can you do this for me?" We're like, "Yeah, we can do that. Let me
Them
go figure out
them
let me go figure out how I'm gonna do that." So, we had
Sure.
4 main lines of business that we operated in, that we stood up, if you will. So, we actually ran finance and accounting for a couple of small banks that either they had lost their CFO, or they had couldn't find the right talent, or they were going through some regulatory issues and they needed some help, some more experienced help. So we did that. We did strategic planning engagements. We did the M&A thing. And then we also did process improvement work, where we would go in and help a bank refine their operational processes. Your audience probably knows this because they live and breathe in banks, right? They oftentimes, we buy technology and maybe only utilize 30% of the technology, because and you might have bought it for the other 70%, but you're so busy trying to get the first 30% up and running and out the door and just replace what you had. There's a lot of low-hanging fruit in terms of being able to help streamline operational processes, with a lot of banks in the technology stack that they already have. And so we went in and did that as well. But all of those engagements, Mike, required data. Everything we did, we needed the bank to extract data for us to be able to go do strategic planning and do the analysis on their bank and show them how they were comparing and what their markets look like and all of those types of things. And that data was a challenge. Getting us that data was always a challenge, regardless of the project we were working on. Every bank struggled with that. And that's really kind of where the light bulb went off.
So, Kim, were all of your clients banks at that time?
For the consulting practice, I would say we worked with one credit union, the rest were banks, and then we worked with a couple of local nonprofits that we helped do some projects as well in our community. But yes, by and large, over that 4 we typically tried to manage 4 to 5 clients at a time, because we were a small boutique, type consulting firm. And so, over the course of time, we worked with 35 different financial institutions, during that 4.5-year period, and many of them hired us for second and third engagements. So, we really became their trusted advisor in terms of, technology, in terms of finance and accounting, whatever it was that we were doing for them.
Well, I think that this conversation could go in a lot of different directions, and we may come back and dig deeper into some of these. But back to your timeline. So it's March of 2020, and I think you started to say that you went out to raise capital.
So we didn't start raising capital until September.
Okay.
Like, after it prolonged for as long as it did, the pandemic, and we couldn't sell, right? We weren't gonna pick up the phone and call bankers, even though I had these 182 business cards, because they were busy saving the world, right? Our community bankers were busy saving the world. And so, we had to make some tough decisions in terms of some sales, positions that we had hired, and we had to let them go, and that was a very, very difficult thing for me to do. And we doubled down on our product development once we kinda made that decision, and we were very fortunate that one of those community banks that were our beta clients, they stepped up and invested in us. And so that's what led us down the path of thinking about using and reaching out to our clients to raise money. And so in total today, we've raised about $25 million for the company. We have 4 community bank investors. We have, a number of high net worth individual and so forth in our local community. Some folks that served on our board. Obviously, when I started to raise money, I went there first because they understood the industry. They believed in me and our team and so forth. They really kind of helped us get started. And then in December of 23, we brought an institutional investor, a true professional institutional investor into our cap table. That's Blueprint Equity out of San Diego. And they've been fantastic partners for us.
Interesting. Thank you.
Mhm.
So Midwestern Securities, I don't know if you know this, but we're an LLC, and I own 51% of the voting units, but we do have about 3 dozen other unit holders who are also
Okay.
primarily community bankers or bank
Oh,
leaders. So we wanted to bring in their intellectual capital
right.
as well. It's great to have smart, committed people around the leadership table with you.
No, 100%. Those 4 community bank investors, they sit on our strategic advisory board, and that's very purposeful, right? Because we wanna make sure that our interests remain aligned, right, with our community bank clients. I mean, that's really, what we're about. I'm about, um, everybody that knows me, I mean, I truly drink when I say I drink the Kool-Aid every day at my bank, like, I drink it. I drank it every day. Like, I loved that. Like, I would still be there if had we not sold the bank. Like, I was all in. We had a great team. We had a great community, and we made a lot of impact in our community, as a result of being the local community bank. Now I'm blessed that I'm able to enable our other community banks across the whole country to have that impact in their communities because we're empowering them, right, to make better decisions for their customers and to make better decisions for their bank and their shareholders and so forth because we're giving them access to information in a way that just hasn't been done before. And so it's easy. I feel like my mission has expanded. I told somebody the other day, I really feel like this is my purpose. I don't know why, but I just feel like that this is my purpose. This is why I'm here. So I don't know.
And so that's great. So you start the business, you raise capital, you're working out some of the startup challenges and things that you need to navigate. So tell us about how you've grown it and what you're doing, what the story is for community bankers. How do you break this down to a community banker who's never heard of you? And frankly, a lot of them, like you said, are very lean. A lot of them, a lot of community bank presidents that we see are involved in everything. They're involved in they're in loan committee. They might be writing loans. Some of them don't have their own administrative assistants. They're spread very thin. They have to have a little bit of knowledge about all of it. They're dealing with regulators. They might be doing uh, their filings with the CFO. So yeah, we work with community banks. 80 million to a billion basically. And
Okay.
so we see how spread thin that the leadership
Mhm.
teams are and how they have to have knowledge over so much that's happening with the bank, and they still have to be expected to be stopped at the local grocery store and be able to remember the person's name and know who their kids are and what their farm loan was. Now, with that said, that's who our clients are right now, 80 million to a billion. We're seeing that change rapidly. We're seeing the mergers and acquisitions pick up, and the banks are just, getting, the charters continue to go away. There's been 4,000 charters that have been lost in the last 20 years that we've been working with banks. Um, so our size is probably going to shift up to like 350 to 2 billion over the next 18 months of who our clients are, just by mergers and acquisitions and change in the community banking space. But that's a little bit of an aside. I'm sure that ties into knowing your customers and knowing your data and being able to leverage that better. Um, but so you've got this great product service. What is it? How do community bankers uh, improve
Think
their
about it.
businesses? Yeah.
Yeah. Yeah. So, if you've never worked inside of a bank before, um, It's astonishing as to how information is delivered. So when I was the chief financial officer at my bank, I had 20 plus emails every day in my inbox with a different report on them. A static, think about it as an Excel spreadsheet. Sometimes it was an Excel spreadsheet, sometimes it was an automated Cognos-based report. Here's your new loans, here's your new deposits, here's the balance changes, here's the past due report, here's your general ledger, right? And it was my job as the CFO to open up all 20 of those emails and try to find the nugget that I needed to take action on today. What was important for me to do today? And I'm going to be honest with you, most days I didn't open up all 20 emails. I didn't have time for that. Okay. So we've taken that process and turned it on its head. So if you think about KlariVis, we're bringing clarity and visibility. Banks have tremendous volumes of data. It's not the volume, it's not the amount of data that you have, it's the accessibility to that data in a way that makes it easy for the banker to see what's important and what I need to take action on today. That's what KlariVis is all about. So think about us as a turnkey data management program for the community banks. So we bring in data from the core system and the ancillary systems, assuming we can get access to that data. Now that's I could go off on a tangent on data accessibility. There's a lot of vendors in this industry that do not provide access back to the data to their clients, and that's a problem. But if we can get access to the data in an automated fashion, we bring that into a KlariVis environment where we have built our own proprietary common data model. And we have leveraged a visualization tool on top of that data model. And so instead of 20 emails that I have to come in and look at every day, right? As chief financial officer that works with KlariVis, they may have 10 dashboards that they come in and look at. And the CEO has access to those same 10 dashboards, but what's important to the CEO today may be 5 different things, right? And the chief lending officer, same thing. And the production team, the same thing. So it's one unified platform where data lives, where data is disseminated, democratized back across the organization. It's trusted, it's secure. And so no longer are people showing up to meetings, and this happens a lot. The chief lending officer comes into a meeting and they've got their total loan balance of X, and the chief financial officer comes in and it's Y. They don't tie together. And so the conversation at the meeting becomes whose number's right instead of what do we need to do? What do we need to take action on? And so what we do at KlariVis is kind of remove all the noise, remove all the uncertainty, and we provide data back to the bankers in a way that is easy for them to consume and easy for them to digest what's important and take action on, so they can actually serve their customers. Most of our customers start their day with KlariVis. We call it coffee with KlariVis. And so they most of the bankers that we talk to, they start their day there because they can get a complete picture of what happened yesterday. So that bank CEO that you're talking about, who has to have his hands in everything, right, at the bank, he's got complete visibility to that now. He doesn't have to pick up the phone and call his CFO or call his IT manager to say, "Hey, can you run me this report because something doesn't quite look right?" Right? He's got it right there at self-service, and he can click on a few buttons and he can get the information that he needs. It just becomes a game changer in the organization.
From the CEO, how does it become actionable and monetizable throughout the organization? Can you give some examples?
Yeah, absolutely. So I'll use the liquidity crisis we had back in 2023 with SVB once it collapsed, right?
Mhm.
All the news you heard on TV was take your money out of the community banks; they're all going down, and you need to bank with the large money center banks, right? That's all you turn on the television, and that's what everybody was saying because we have this run. And what our bankers had the capability to see, and we've got some great stories from our CEOs because we have a dashboard in our platform today that shows deposit balance changes at the customer level. So they were able to come in, and maybe Mike, you had been banking with this bank for 20 years. Maybe you kept $2 million in the account, and all of a sudden I come in and I see Mike's moved $1.9 million out of the account. The CEO sees that immediately. At the same time, Mike's relationship manager sees it immediately. They're able to get on the call and say, "Okay, who's reaching out to Mike and what do we need to do?" They did that and they were able to start getting those deposits back because they just needed to have a conversation with the customer and say, "Look, we are not SVB, right? We're a community bank. Here's our financials. you've been banking with us for 20 years. You don't need to be afraid. We're stable. We've got FDIC insurance, and they're able to have those conversations and get those deposits back into the bank before the customer set up their new debit card and changed their bill pays and did all of the stuff, because it was instantaneously able. That visibility was there. So that's just one example of CEOs being able to see something in the platform and immediately take action, rather than banks that didn't have KlariVis. I can tell you they probably were spending an hour or longer every day trying to figure out who those customers were that were moving money, because it's not that visible. I mean, you got to go into the weeds. And so we've done that work for you.
Interesting. Are there a couple other data points that you would point to as great examples as well?
Yeah, so we've got one of our banks picked up 40 basis points on their net interest margin in the first 6 months of having KlariVis after we implemented. And then so I had a conversation with the CFO and I said, "Talk to me about this, right? Why? What changed?" And it's about $1.5 billion organization, and she said, "Kim, we have individual loan authority for our lenders up to a certain amount, right?" And she said, "I didn't see what they were putting on the books until the end of the month. Typically, it was a week after the end of the month, right? That's when I would get my report of the loans that were booked under their individual loan authority." Now she sees it daily. And she said, "Because I see it daily, if John priced something today that I didn't like, I can pick up the phone, I can have a conversation with John and change his behavior now." So that's 30 more days of him putting loans on the books at the right price point, not at the below price point. That's margin leakage, right?
Mm,
That's
Or
margin leakage. So so being able to have that visibility in an easy to consume fashion, and in a way where John is seeing it also. So John and Joe can sit and have a conversation and talk about these things in the immediate term, rather than waiting 6 weeks and having 6 weeks worth of loans booked at a subprime rate, if you will. So that's huge. We have another client who was able to pick up 50 basis points in their commercial loan yields for their first year on KlariVis, their first year on KlariVis, without doing it by budget, without volume. And that is all about the relationship pricing. So because you have the visibility now into both loans and deposits into into your portfolio, if a lender wants to come and do a subprime rate because this is my best customer, the chief lending officer was able to look into KlariVis and say, "Is he really your best customer? Because he's doing treasury management with somebody else. We don't have any of his deposits. We don't have his operating account. So
where's the
he
401k?
He might, and where is this 401k? He may be the guy that, always takes your call and you have built this phenomenal relationship with, but he's not the best customer. And so let's have a conversation about how we can offer him that rate. And if he's not willing to move these services to us, then we can't give him the rate that you're proposing." And so by that kind of daily visibility and individual coaching, because the data is right there at your fingertips, you're not having to go get somebody to run a bunch of reports and then, wait till those reports get generated. And then are those reports correct, and go back and forth. All of that's gone away. You're able to make decisions in the moment, and confident decisions in the moment. So those are just two, use cases that resonate very well with me as a prior chief financial officer of a community bank. I was always anxious and always interested to figure out, okay, what can we do better? How can we improve our margin? Because we ran very lean. And how can we improve our loan yields? So that's real money.
So that's great information, Kim. Thank you. So our audience is bankers, it's financial advisors, it's support people in the financial services industry, it's college students who might be interested in finance careers. So we've got lots of different levels of expertise, experience, and understanding our industry jargon. So regarding wealth management in community banks, specifically, will you talk about this thing called the leakage report? And will you talk about how KlariVis can help community bankers understand that report, or make better financial decisions off of that report?
Yeah, absolutely. This is one of our newer product releases. We call it transactional intelligence. And so, what we're doing is we're looking at and mining all the data, all the transactions that are going through a bank's deposit accounts with their customers. And we're able to surface back to the bank those customers who are making recurring investments with a wealth provider that is not them. So think about Fidelity or Schwab or Robinhood or what have you. And so now they're seeing that either the customer, they're able to see very visibly across the organization, we've got this group of customers with this much volume that are have an investment portfolio. It's just not with us if we have a wealth management team. And so now you can create a lead list if you want, right? You can also see when you drill into that particular customer, are they using your account as the primary financial institution or is it a hotel account? So how are they is it just money coming in and then a credit card payment going out and a wealth and management investment going out? That's a hotel account. You may think you've got their primary relationship, but you do not, right? And so you're able to see that visibility as well. So when you're sitting down to have a conversation with that customer or the wealth management team wants to, grow their book of business, the best place to grow your book of business is with your current customers, right? Those that are already doing business with you. And what's so cool about it, it's not just transfers out, it's also transfers in. I mean, I get more excited about the transfers in because that means they've got a big pot of money probably sitting somewhere, right? That's working for them that's not with your bank. And it's not just around wealth. I know that's very applicable to this conversation I'm having with you today. But think about treasury management. I mentioned the relationship pricing, right? That we all say we do in banks. You want to do this great price and put this great deal together for this lender or for this borrower, but you can look now in KlariVis and say, well, are they using us for treasury? What are their average deposits? How many ACHs are they, transacting a month? What like you're able to really kind of get a much better picture of truly what that customer is doing with you, or are they using you as a hotel account? Right? Money coming in, paying out American Express, paying out your wealth management, and investments, and then that's it. And so it just gives that visibility to the bank to be able to take action, and really that's where this thing gets real exciting, right?
Right, there's so many ways that this gets more exciting for bankers with intentionality and leveraging tools that are at their fingertips or can be at their fingertips.
Right.
Can you paint a picture of what a standard leakage report from a core processor would look like versus what
They don't
you?
they don't they don't deliver that. So they to my knowledge. So
Okay.
what we're taking, if you look at the specific, transaction description that goes through, like, your bank, it is a long, ugly XY243Z, right, number. That's what the core is giving back to the bank. We're taking that and we're enriching it to say, okay, we can tell because of the model we're using an AI model for this. We can tell um, what that transaction is, and we've been doing a lot of work recently, Mike. I don't know if you've seen it on Coinbase. So this whole debate going on in Congress right now around the Clarity Act and allowing removing the loophole. So Coinbase and other stablecoin providers don't pay interest and rewards on deposits. That's a real issue. And so what we did is we looked across our client base, and we dissected all of those transactions, and we were able to identify that 9 out of every 10 community banks already have customers actively sending money to Coinbase or getting money
Interesting.
back from Coinbase. And that's something that customers they don't have that visibility, but we have that visibility too. And the other piece to it is for every $2.77 that leaves the bank, only $1 comes back. So the deposit risk is real. And today it's following market. You can see it's speculative. When Bitcoin's value goes up, right? You see more transactions. When it goes down, you see, the volume and the numbers less. So when we look at the trends, we can tell that. But all they have to do is start allowing those issuers to start paying interest and rewards. And now it becomes a yield incentive. And because they don't follow the same regulatory guidance that our banks do, it's going to have an impact on lending. Right? Because it absolutely they say that market's gonna grow to 5 trillion. Where's that money gonna come from? It's going to come from your banks by and large. And so it's a real issue, and we're able to highlight that for our clients. We've actually done a lot of detailed work with our clients showing them, okay, here's your customers, here's who's transacting that way. And it's not that we're anti-crypto, Mike. It's that we need to be knowledgeable. The bank needs to be knowledgeable. So they need to be having these conversations with their customer, and how can we support them? How can we help you alongside of what you're wanting to do with Coinbase or Tether or whatever the instrument is.
Well, in our opinion, it's okay to be anti-crypto. Crypto is the biggest competitor of the American banking system, and community banks need to be aware of this. And when their board members are using cryptocurrency, which is uh, ridiculous characterization of what's happening there. It's not a currency in our opinion, but it is the enemy of the American banking system. So they've got to have that data. So talking about data, let's imagine a world where Amazon has its own stable coin,
Mhm.
or Walmart has its own stable coin. They really don't have to pay interest to attract, because there's lots of other ways they monetize
That's
that
right.
stable coin, right? Tell me if I'm wrong on any of these, but they're getting the money, they're putting in a treasury, they're getting paid their interest on the treasury. They're gathering the data, they're marketing to the consumer. They know when you shop, what you shop for. They're able to market to you and get you to spend more of your money with them. So there's lots of ways that Amazon and Walmart outcompete banks by using great data with stable coins. Now, banks are in the pole position. They have that data, but to this whole discussion's point, uh, they're not aware of it. Most of them aren't aware of it, and most of them aren't using it for intentional marketing or servicing their customers better, more proactively. Like, you can bet that, well, I know Amazon's telling me what I need to shop for before I need to shop
That's
for it.
right.
Uh,
It's kinda like the buy now, pay later stuff too, right? Amazon and all of these things have that embedded right into their
Sure,
platforms today. This is the same thing, right?
sure. Yeah.
That's a completely different conversation, and that's something we also have visibility into. So we can see the customers and the types of transactions that they're transacting on buy now, pay later. Well, that's really important. If you've got a big loan with this customer, right? And now you see that they're having maybe some financial stress because they s you I mean, there's a lot of, buy now, pay later transactions that are happening in their checking account. You can be proactive with that customer and have a conversation with them maybe before you start to have a credit issue as well.
Banks can't just take deposits and make loans. They have to be involved in other business lines,
Yeah.
like wealth management, like insurance, like accounting potentially. Um, I assume that it's easy to pull data out too. If your customers, if you have an insurance agency and you want to build a marketing campaign to them, it's easy to see where premium checks are going. If you've got
Mhm.
premium checks going to
Yep.
State Farm and you want to market to those folks and get them to use your insurance agency, this would help with that.
100%. That's another one of the categories that we show. We have a couple of our banks that have strong insurance, programs in their bank, and so, that's one of the use cases that we've solved for as well. And the beautiful thing about it is, Mike, community banking is all about relationships, right?
Mhm.
It's all about relationships. So, you can now arm your marketing team to put the right messaging together for that group of customers. And at the same time, because you're using the same platform and you have access to the same data, the relationship manager but can be having a conversation. Because we know it takes multiple times for somebody to pick up on what you're saying, right? 6, 7, 8, 10. I have no idea, but there's a study out there. There's a lot. So the fact that you can put messaging in the app, in their mobile app, you can do a marketing push, but at the same time, the unification of the fact that your marketing team now has visibility to the same data in the same way that your relationship officers have, that becomes a game changer in terms of business development, in my opinion.
I love this conversation, and it's so important. Um, so the bankers need to understand their data better. They need to have leadership teams that can take this data and make it actionable, build marketing campaigns around it. And they need to have sales managers who enforce that we're asking for business, that we're doing the outreaches, and that we are asking. We have a saying here that banking services are bought generally, not sold. But the rest of financial services, wealth management, trust, insurance, is sold, not bought. If you understand the
Mhm.
intentionality required with it, the phone just doesn't ring saying, "Hey,
That's right.
the farm next to us came up for sale," or "I need to buy the house next, or buying our next house. I need a mortgage and I need it in 45 days." The wealth management side requires generally more proactivity and a nurturing process to understand the data, get those leads, put them into your CRM, create a drip system that takes multiple contacts, like you're talking about. That's all changed, and community bankers that don't realize that that's changed are missing out. They think that their competition is only who they can see, the other state bank down the street or the credit union down the road. Of course, just in February, uh, Edward Jones got FDIC insurance or FDIC approval for their bank charter. Like you mentioned, Robinhood. I'm quick to tell community banks who our competitors are, uh, and they're all making money on cash management services. They all own a bank. I guess I can't say all, but most of them own banks or are banks. So if a community bank is starting wealth management, it's a business within the bank, right? It's a business within the business. If they bring in another broker dealer that also owns a bank or is owned by a bank, they're bringing a bank inside of their bank. And this isn't just we all get along and so and so has been banking here since they were, their grandma brought them in when they were in first grade to get a sucker and drop off their Christmas money. Um, that world is over, and we've got to understand the data better, and we've got to use the technology to create systems to nurture those relationships and give those people a reason to do all of their financial services, or as many as you can of their financial services with you. Um, so that sales management piece needs to be the last piece of this. Understand the data, build the marketing campaigns, put the sales systems in place, and hold people accountable to executing the plan. We have some of our bank CEOs get together systematically quarterly every year, and we had one of those meetings just this Monday. One of the bank presidents who has really transformed his bank from a very small one-town bank into, I think, 7 branches, and from just a very traditional uh, bank to uh, a very strong wealth management division. His local competition of 2 other financial planning firms in his county has, quote, "fierce," which was great. He also says wealth management is one of the best things happening in his bank. So he considers himself very strong, but he's recognizing the competition is fierce. And for the first time, he said this word to me, fierce, that he's really aware that the competition's looking for the whole wallet. And they've got relationships too, but they've got uh, better technology, a better sales system, perhaps maybe not a better sales system, but they're putting a lot of effort into their sales system. And he's recognizing that uh, I've got to realize that these folks are fierce competitors, and it's not just the bank or the credit union down the road. So how do we help him understand the data and be more intentional to make this actionable and
Mhm.
monetizable? So I love what you guys are doing. So I was
Thank you.
excited to get you on the podcast here.
I appreciate it very much. It's been a great conversation. I could do this all day long.
Yeah, yeah. Me too. Me too. Um, so as we wrap up,
Mhm.
if there's one action item you would share with community bank leaders um, to take after this, what would it be?
Yeah, I'm gonna give you 2 because I think they go hand in hand. The first one is do an analysis of what you're spending on the status quo. I guarantee you will be shocked. If you take the employees that are involved in building reports, Excel files, their salaries, the numbers of hours that they spend on a monthly basis doing that work. Everybody's doing it off the side of their desk in most of these community banks, especially the ones that you're talking about, right? From 80 million to 1 billion, even the 350 to 2 billion. Do that analysis. We've done that analysis with our clients. The average billion-dollar bank is spending about $45,000 a month on the status quo. They don't know that. So do that exercise. It's not a complicated exercise, and if your team if any listener on here wants help with that, we're happy to give you some tools to do that. So start there because The biggest problem that I think in community banking, you're 100% right. These small community banks, they're lean. They are hesitant to write a check for another new tool that's just adding to my non-interest expense line. But what they're missing in this scenario is how much they're already spending on the status quo. So just be knowledgeable about that. You still may make the decision that I'm going to keep doing what I'm doing, right? And that's fine, but just make an informed decision. Make sure you understand what you're spending today. So that would be number one. And then number two is get started. One of the biggest hesitations that we have with our clients when we're talking with them is, oh, my data is not clean. Okay, well, nobody's data is clean. It's just not. And you're not going to buy KlariVis and all of a sudden it's going to be clean tomorrow, right? That is a journey. But what KlariVis does is it provides visibility again to the entire organization. I use this example all the time because it resonates with everyone, and it's true. I do not think in our 150 plus banks that we have implemented so far, actually it's more than that, but not one have we stood up and gone through the executive walkthrough and the CEO says, that guy hasn't worked for us in 5 years. Why does he still have accounts assigned to him? Because the officer shows up on one of those dashboards. And so now it starts to resonate and be like, oh, okay, well, yeah, there's some things that we need to pay attention to in terms of cleaning up our data, but it jumps off the page at you. You're able to see what are the business data elements that drive your strategy. That's where you need to start too. Don't boil the ocean, right? You don't need to boil the ocean. What are you trying to accomplish? What is your strategy? Let your business strategy drive your data strategy. Um, and when you have a platform like KlariVis, all of that just becomes very visible and you're able to focus your cleanup efforts, and your time, and you've freed up a lot of resources to be able to do those things now because they're not building Excel files and dumping data into other reports and changing the formatting and going back and forth with the business, banker to determine what is it exactly that you want. I thought I gave it to you, but what is exactly that you want? Having those kinds of conversations. The status quo is not acceptable, in my opinion. There is a better way, and our clients are seeing a 10 times ROI on efficiency alone.
That's really great. I love it. So, analysis on the status quo, the cost of doing
Yes.
nothing, the cost of inaction.
It's a real cost.
Yeah. And just get started. It doesn't have to be perfect. Just get
That's
started.
right. Get
I
started.
love it. So for our listeners, if they want to learn more about you and KlariVis, what's the best way for them to do that?
So we have a great website, www.klarivis, KlariVis.com. Follow me on LinkedIn, please. Send me a message. We travel a lot. We love getting out and talking to bankers. And so if we happen to be somewhere that's close to you and you want to come have a conversation, have a cup of coffee, please call me, DM me, send me a message, because that's what I love to do. So we always learn from those conversations. But yeah,
Absolutely. That's great. Kim, thank you for joining us.
thank you.
And to our listeners, we hope that this added value. I know I really enjoyed the conversation. There's a lot of great takeaways from this. So to our listeners, until next time, from all of us at Midwestern Securities and Banking on Growth, thank you for joining us.
Thank you.
Thank you, Kim.
This has been another insightful journey with Banking on Growth with Michael Graham and Midwestern Securities, a member of FINRA and SIPC. We appreciate your time. If you found value in today's discussion, consider subscribing for more thought-provoking discussions in the world of finance. Your support helps us continue to bring you quality insights. If you have a topic you'd like us to consider covering or have thoughts on one of our episodes, we'd love to hear it. Just email us at media@midwesternsecurities.com. Remember, the power to grow is within you. Thank you for being a part of the Midwestern Securities community. Until next time, stay inspired and keep banking on growth.